sectorial analysis of Nigerian informal sector, the role of technology in optimal tax revenue collection. The first slide, please. If you look at the first slide, you see the representatives of the informal sector, some of them, not all anyway. So you can see that the informal sector is really informal. Let's go to introduction. One of the key characteristics of developing economy is the incidence of large informal sector. Informal sector has been described as all economic activities in all sectors of the economy that are operated outside the purview of government regulation. It has also been viewed as a set of economic units which do not comply with one or more government-imposed taxes and regulations, but whose products or services are considered legal. However, the International Labour Organization (ILO) and United Nations Development Programme (UNDP), as a result of inability of the modern sector to absorb new entrants. The informal sector covers a wide range of labour market activities that combine two groups of different nature. On the one hand, the informal sector is formed by the coping behavior of individuals and families in the economic environment where earning opportunities are scarce. You see, when my brothers go for apprenticeship and they spend five to 7 years and they get what they call freedom, their master will settle them, give them some money, but the money might not be enough. Then the man ends up selling the landed property in the village, his inheritance, to make up and now go and start his own trading activity. So you can see where the scarce resources is coming from. On the other hand, the informal sector is a product of rational behavior of entrepreneurs that desire to escape state regulations, especially for the purpose of taxation. You see, experience has shown that some people at some point in time who had limited liability companies, if they wake up one day and say, because the government FIRS and the other bodies are troubling them because of taxation, they will prefer going under. So you see them leaving the formal sector to informal sector deliberately. According to IMF, informal sector accounts for about 65% of economic activities in Nigeria, while World Bank reports of May 12, 2021 noted that the informal sector in Nigeria employs about 80% of the workforce, thereby stimulating the growth of market economy, promoting flexible labor market, stimulating productive activities, and absorbing retrenched labor from the formal sector, where doctor is working. The scope of activities of informal sector in Nigeria include the following: agriculture, you see laborers there, small farmers and those in animal husbandry, those in general trading, transportation, construction, food preparation, credit facilities, those ones, the credit facilities, you can, you know, there are just these people that did daily contribution, they are part of the informal sector. Refrigeration, mechanical and electrical work, dressmaking, information technology and communication, footwear, gold and silver splitting, traditional healer, etc., etc. There is the need for us to extract the characteristics of this informal sector. These informal sectors are, you have so many small-scale, unincorporated businesses thriving there. They are legitimate, they are legal, they operate outside the formally regulated monetary economy. They are large in number, diverse, they are often mobile, move from place to place. One of their problems is that they have poor record keeping. They are just family-oriented businesses. Predominantly, they like cash-based transactions. They don't want their monies to be traced to the bank, so that when tax offices get on them, they will not see the traces of the money. There is high level of illiteracy and they are unable to employ qualified accountants. The best they have is maybe keepers. They don't have tax-paying culture at all. And to enforce compliance there is a very big challenge. Okay? You can see we are there. This is like training some of the market women on how to keep even a simple record so as to be able to at least know if they are going up or moving down. But even at then, they don't even distinguish between their capital and their profits and even their private expenses. So we move on. Yeah. Factors hindering effective tax administration in the informal sector. Like we said earlier on, they are cash-based economy. The Nigerian informal sector conducts most businesses on cash. These enterprises often refuse to accept checks. There's somebody you give check, you say, I don't know what you're talking about. Thereby enabling them to consider their turnover and taxable profits. To evade taxes, such businesses manipulate their figures for tax. Those are the ones that moved from formal to informal sector. To evade taxes, such businesses manipulate their figures for tax reduction purposes and are able to obscure all revealing third-party information on their transactions. This is one of the primary reasons why Central Bank of Nigeria introduced cashless economy. Like I said earlier on, they have poor record keeping. Most self-employed people are generally lax about maintaining up-to-date accounts. Thus, ascertaining the correct level of income generated by the business and giving a meaningful assessment of tax liability is rendered difficult, if not impossible. The next factor that hinders effective tax administration in the informal sector is capacity constraints. Some state and local government authorities in Nigeria suffer from capacity constraints in form of lack of adequate manpower and necessary skills needed to capture the largely untaxed informal sector, while the informal sector accounts for over 50% of the economy. The number of staff in the relevant tax authorities may not be adequate to cover the large number of potential taxpayers in the informal sector. In addition, the unique nature of the sector requires that officials in the tax authorities acquire special skills to deal with them. Some of the officials lack the requisite skill and capacity to detect, audit, and even properly enforce various applicable tax laws against tax defaulters. Last month, somebody called me from Enugu. He's a businessman, he has one small cottage industry. That people from Enugu State Internal Revenue are in his office, that they are insisting that even the security men that are earning 20,000 naira per month must pay taxes. To the extent that, to tell you how ignorant about the law the tax officer is, she now referred the case to customary court. I am telling you, to customary court, and customary court wrote the taxpayer that he should appear. I have it in my phone. I told him don't go there, he doesn't have jurisdiction over tax matters. But the person that referred the case is a staff of Enugu State Internal Revenue Service. That is to tell you capacity constraints. Complication arising from lack of clear-cut distinction between ownership and business capital. You see, some of them, they will make 1 million, they will sell 7 million from there, go and erect foundation in the village for house. Before you know it, the man goes down. And he said that witches are wizards. Or that the people where he's living, they don't like him. So as a result of the business structure adopted in the informal sector, it is usually difficult to ascertain the profit, capital, and even private money for tax purposes. This occurs due to non-separation of business capital and from personal funds Thus, the question of ascertainment of business profit for tax purposes becomes difficult. Other factors include lack of communication between government and business sector. Some of the key players in the informal sector do not have faith in government policies and programs. This may be due to misunderstanding of government programs arising from absence or low communication between government and informal sector operators. There is therefore a sort of social attitude of psychological between the government and the operators in the informal sector. This creates apathy towards government and its programs, resulting in the declaration of false income and consequent loss of tax revenue. Some of them will tell you, after what did government do for me? When I sold my inheritance to commence business, was government not there? How much did they give me? So, other factors include informal tax payments to touts. I'm aware of the fact that if you're offloading a computer at Lagos, you're offloading container at Lagos Island or anywhere, you pay to touts. So those individuals and enterprises operating in the informal sector may not be paying statutory taxes in real sense of the word. They make different forms of compulsory payments to touts and thugs operating in uncoordinated and good levy systems that have come to be integral part of the Nigerian market and motorbikes. These thugs and touts are usually foot soldiers of the ubiquitous but largely invisible market and motorbike kingpins who assume lordship over various spheres, usually occupied by those operating in the informal sector. After all this, I think leveraging on technology will go a long way to bring in these informal sector operators into the tax net. So in light of the foregoing, the challenges that face the government in designing and administering appropriate mechanisms for increased tax revenue collection from the informal sector of the economy can be mitigated through the application of technology. Globally, application of information technology has taken a center stage in various endeavors over the last few decades. Tax administration has not been left out, as tax authorities in different climes, including developing countries, continue to harness technology for efficient and effective tax administration. Also, the effect of COVID-19 pandemic has also necessitated the need for tax authorities to embrace technology, as it is obvious that only normal administrative procedure cannot generate the required revenue to meet government needs for infrastructure and social development. So, there is no doubt that the Federal Inland Revenue Service has taken the lead in deploying technology in the onerous task of tax administration. The various innovations deployed by FIRS include: 1. Tax Pro Max. This is an in-house technology developed by young men in the service. With this solution, you don't need to rush to FIRS to file your returns. From the comfort of your room, your office, you file your returns, generate PIN, and pay your tax using the Remitr or whatever this you prefer. You also generate your receipts. You apply for tax clearance online and you get it. Although there are conditions attached to obtaining tax clearance, so that nobody will ask you how easy it is. The condition is that you must comply. When you comply, nobody denies you your tax clearance. You get it. VAT automation. If you go to ShopRite today to buy something, the receipt they will give to you, you will see FIRS. That is the beauty of technology. We have also cascaded that to some hotels, and we have decided that anybody that fails to key into it, for instance, if this hotel fails to key into it, we will not patronize them for any of our activities. That doesn't mean we will not still enforce compliance, but we will not patronize them. So we encourage people to key in. contact center. If you pick up your phone now, the contact numbers are there. If you call our contact center and you want to speak to somebody in Hausa language, you will speak. You want to speak in Igbo language, you speak. You want to speak in Yoruba or Pidgin English, you will speak. So that whatever inquiries you want to make, you can get that. Electronic documents and records management system. This is an in-house system that enables us to retrieve, for easy retrieval of taxpayers' records and work on them seamlessly. Synchronization of FIRS through CAC on issuance of TIN among other issues. Now, I know when I was tax controller, I had to put somebody because he wanted to collect money to issue TIN. In those days, you see people, even when you put TIN is free, people will now want to collect money to issue TIN. But what I have done going forward with collaboration with other agencies is that once you are incorporating a company with CAC, your TIN comes up. You don't need anybody to, you don't need to come to FIRS to get your TIN. However, it is pertinent to know that FIRS taxpayers operate largely on the formal sector. Hence, the focus of this paper is on state internal revenue services, whose taxpayers are more on the informal sector. As expected, Lagos is a center of excellence. Lagos State Internal Revenue Service is the trailblazer in the adoption of technology to enhance its tax administration. No wonder it generated the highest IGR than any other state in Nigeria. The LIRS was the first to begin the issuance of electronic tax clearance certificates, which commenced in 2004. Other technological innovations deployed by the state include the following: e-filing of employer and individual annual tax returns, auto-generating of individual taxpayer identification via LRS e-tax platform, linkage of individuals' bank verification number to its e-tax platform, auto-generation of payee receipts on the e-tax platform, electronic submission of objection letters, and holding virtual meetings. It is also important to state that some financial institutions are assisting some states in deploying technology for revenue generation. For instance, Fidelity Bank successfully deployed POS, terminal tax collections, in Abia, Imo, and Sokoto states. The bank also deployed automated electronic motor vehicle license in Sokoto, Anambra, Abia, and Kano states, while successfully deploying electronic collection solutions for Ondo, Anambra, Abia states land registry automation process. It is instructive to note that the use of social media like Facebook, Instagram, Twitter, which is technology driven, has also contributed positively in bringing some recalcitrant taxpayers into the tax net. We do that a lot, and I believe that states can also do that because the payment gateways, the fintech companies also contributed. Okay, now challenges in adopting technology. As good as the technology is, there are still challenges in adopting that, which include inadequate IT experts. The state internal revenue services can boast of accountants and tax experts, but cannot do so about IT experts. These IT experts, they are young men. I wonder how many state internal revenue services that can afford to employ and keep them. They're always mobile. So, system downtime. The few states that have deployed some technology solutions still request for manual filing to mitigate the effect of system downtime. So, some do not have enough bandwidth to even accommodate the volume of records that are coming from taxpayers. Poor interface development. The lack of user-friendly interface is another setback experienced by taxpayers. Some of the state internal revenue service websites are not easy to use. It's almost same with FIRS before the adoption of tax programs, which has reduced compliance costs. There are benefits to be derived from deployment of technology. It's obvious that the future of tax administration it will ultimately be driven by technology. This is because most individuals and enterprises now operate in digital space, and tax authorities can only identify taxpayers who fall within their respective jurisdiction by fully embracing technology. The use of technology will enable tax authorities to identify taxpayers, verify information, and confirm the authenticity of tax returns filed, thereby reducing the incidence of tax evasion. The deployment of technology in tax administration will reduce the paperwork in filing of tax returns and preparation of assessments, thereby leading to administrative efficiency. This will in turn encourage compliance and reduce compliance costs for taxpayers. Most importantly, is that the adoption of technology will help to widen the tax net, thereby increasing the desired IGR for infrastructure and social development. Ladies and gentlemen, permit me to conclude by saying that the role of technology is optimal in optimal tax revenue generation cannot be overemphasized, especially as there is the need for increased revenue to finance various government projects, and also to the need to reduce over-reliance on oil revenue due to the volatility of the sector. An overview of revenue authorities shows that there is an improvement in deployment of technology in any case. However, considering the speed at which technology is evolving, there is the need for revenue authorities, most especially the state internal revenue services, to increase the speed of adoption of technology in order to achieve the full benefits of adopting technology. It is therefore advisable that other state internal revenue services should emulate FIRS and NIRS in embracing technology, as it appears to be the only panacea to improve compliance in both formal and informal sector of the economy. Please, I want to end by appealing to the tax practitioners, because I know that the Chartered Institute of Taxation is the leading body in tax practitioners, among the tax practitioners, to advise your clients to always pay their tax, because it pays to pay taxes. Thank you very much.